There's a moment that happens to almost every trader who eventually quits. They don't talk about it much. Afterward, they don't announce it. But if you could sit with them in that moment, you'd see something specific happening. They're tired. Not the kind of tired that comes from a long day or a hard week. A different kind. The kind that lives in your chest and makes everything feel heavier than it should. And in that tiredness, they make a decision. They tell themselves a story about why this isn't working, why it's never going to work, why they've given it enough time and enough effort and it's okay to stop now. And they walk away. What they don't know, what they can't see from inside that moment, is how close they actually were. Not close in some vague motivational sense. Close in a very specific, measurable way. They were on the edge of something shifting. They were in the part of the learning curve where competence was about to emerge. They were at the exact point where, if they had stayed just a little longer, everything would have started to click. But they couldn't see it. And so, they left. And later, sometimes years later, they wonder. They wonder if they quit too soon. They wondered what would have happened if they just held on. This isn't a story about one trader. It's a pattern I've seen repeated so many times that I can almost predict it now, and I want to talk to you about why it happens. Not to motivate you to keep going no matter what, but to help you understand what's actually happening inside you in these moments when you're thinking about giving up. Because if you understand it, if you can see it clearly, you might be able to make a different choice. Not an emotional choice driven by exhaustion or disappointment, but a clear choice based on where you actually are in this process. The question at the heart of this is simple but profound. Why do traders give up when they're closest to success? And the answer isn't what most people think. It's not about lack of discipline or mental toughness or commitment. It's about something more subtle and more human. It's about what happens to your perception when you've been struggling for a long time. How your mind interprets the data, how fatigue changes the way you see your own progress, and how, in the absence of clear external markers, you start to believe stories about yourself that aren't true. Let me start by describing what closeness to success actually looks like in trading, because most traders have the wrong picture in their heads. They think progress is linear. They think if they're getting better, they should feel it clearly. They should see their equity curve rising smoothly. They should experience a growing sense of confidence and control. And when that doesn't happen, when instead they experience what feels like chaos and inconsistency and self-doubt, they conclude they're not making progress at all. They conclude they're stuck, or worse, moving backward. But that's not how skill development works, especially not in trading. Progress in trading looks more like this. You're learning for months. You're studying patterns, testing strategies, taking trades, making mistakes. And most of that time, you feel like you're fumbling in the dark. You understand things intellectually, but you can't execute them consistently. You know what you should do, but in the moment, you do something else. You have good days and terrible days, and you can't figure out what makes the difference. This phase can last a long time. Longer than you expect. Longer than feels fair. And then something happens. It's not dramatic. You don't suddenly become profitable overnight, but small things start to shift. You notice a pattern you didn't see before. You catch yourself about to make a mistake and stop. You execute a trade exactly according to your rules, and it feels almost automatic. These moments are quiet, easy to miss, and they're mixed in with plenty of moments where you still mess up, where you still feel lost, where you still question everything. This is the zone where most traders quit. Right here, in this messy middle where things are starting to work but don't feel like they're working, where competence is emerging but hasn't stabilized, where you're actually improving, but the improvement isn't obvious enough to override your exhaustion and doubt. This is where you're closest to success, and it's also where you feel furthest from it. Why? Because your perception has been worn down. You've been disappointed so many times that you've stopped trusting positive signals. You've had winning streaks that fell apart. You've had breakthroughs that turned out to be false confidence. You've convinced yourself you were getting better only to have a terrible week that made you question everything. So now, when you actually are improving, when the small shifts happening in, you are real and meaningful. You don't believe them. You dismiss them as noise. You tell yourself it's just luck, or variance, or temporary, and you focus instead on all the ways you're still failing. This is what exhaustion does. It doesn't just make you tired. It distorts your perception. It makes you weigh negative evidence more heavily than positive evidence. It makes you focus on what's wrong rather than what's changing. And it creates a narrative in your mind that feels absolutely true in the moment, but is actually missing crucial information. The narrative says you're not getting better. You've tried everything. You've given it enough time, and it's okay to stop. But what that narrative doesn't account for is that you're in the hardest part right before the breakthrough. Let me tell you what actually happens in the minds of traders who are close to quitting. They're running a constant internal calculation. On one side, there's the pain of continuing, the frustration, the financial losses, the time invested with unclear returns, the emotional toll of managing their own psychology every single day. On the other side, there's the possibility of success. And here's the problem. That possibility feels increasingly abstract. They can't see it clearly anymore. They can't feel it. It's become a concept rather than something real and tangible. So the equation becomes simple. Concrete pain versus abstract possibility. And concrete always wins. Duh. Pain is right here, right now, in their body, in their account balance, in their daily experience. The possibility is somewhere out there in a future that feels increasingly unlikely. And when the pain becomes heavy enough and the possibility becomes fuzzy enough, the decision to quit starts to feel not just reasonable, but necessary. But what they're missing, what they can't see from inside that state, is that the possibility isn't abstract at all its close. It's in the small changes they've been dismissing. It's in the patterns they're starting to recognize. It's in the mistakes they're making less often. It's in the way they're beginning to think about trades differently than they did 6 months ago. All of this is evidence of proximity to success. But they're too exhausted to see it, and they've been disappointed too many times to trust it. There's another layer to this that makes it even more complex. Traders who are close to success often experience an increase in emotional difficulty, not a decrease. And this is counterintuitive. You'd think as you get better, trading would feel easier. But often it feels harder. And this is because as you improve, the stakes feel higher. You're no longer just learning. You're on the verge of something real. And your mind knows this, even if you don't consciously recognize it. So the fear intensifies. The pressure intensifies. Every trade starts to feel more significant because part of you senses you're close to turning a corner. This increased emotional intensity gets misinterpreted. Traders think, if I'm getting better, why does this feel worse? Why am I more anxious now than I was when I first started? And they conclude that something must be wrong, that maybe they're not cut out for this, that maybe they're actually getting worse, not better. But the intensity is an evidence of regression. It's evidence that you're approaching a threshold. It's the psychological equivalent of the resistance you feel right before you break through a physical barrier. Think about learning any difficult skill. Right before you make a significant leap in competence, there's often a period of heightened frustration. You're aware enough to see what you should be doing, but not skilled enough to do it consistently. You're in between beginner and competent, and that in-between space is uncomfortable. It requires tolerance of your own imperfection. It requires continuing to show up even when you're acutely aware of your limitations. And most people can't tolerate that discomfort. So they interpret it as a sign to stop rather than a sign that they're almost there. Now, let's talk about what success actually looks like when it arrives, because this is another place where traders have the wrong expectations. They think success in trading means finally feeling confident all the time, finally having certainty, finally not feeling fear or doubt or anxiety. They think successful traders have transcended the emotional struggle and operate from some calm, enlightened state where everything feels easy. But that's not what happens. What happens is much more subtle. You don't stop feeling fear, you just stop letting fear control your decisions. You don't stop doubting yourself, you'll just develop the ability to act. Despite the doubt, you don't stop making mistakes, you just make fewer of them, and you recover from them faster. Success in trading isn't the absence of difficulty, it's the development of the capacity to function well in the presence of difficulty. And here's why this matters. When traders are close to success, they're often experiencing exactly this. They're functioning better despite still feeling uncertain. They're executing their rules more consistently, even though they still have doubts. They're managing their emotions more effectively, even though the emotions are still there. But because they're still feeling the discomfort, because trading still feels hard, they conclude they haven't made progress. They're waiting for a transformation that makes everything feel different, and when it doesn't come, they think they've failed. The traders who make it through this phase are the ones who learn to redefine what progress means. They stop measuring it by how they feel and start measuring it by what they do. They stop looking for the complete absence of fear and start looking for the ability to trade despite fear. They stop waiting for certainty and start acting from their system even when they're uncertain. And this shift in measurement changes everything, because suddenly they can see that they actually are improving. The evidence was there all along. They were just looking for the wrong kind of evidence. Let me give you a specific example of what this looks like. Imagine a trader who's been struggling for 2 years. They've been working on a strategy, studying the markets, taking trades, managing their psychologists, and they're exhausted. They've lost money. They've had setbacks. They're thinking about quitting. But let's look at what's actually changed in those 2 years that they might not be noticing. 2 years ago, they would enter trades impulsively based on emotion and FOMO. Now, they wait for their setup most of the time. Not every time, but most of the time. 2 years ago, they would move there. Stop loss when a trade went against them, hoping it would turn around. Now, they take their stops according to their rules more often than not. 2 years ago, they would revenge trade after a loss, trying to make back money immediately. Now, they step away more frequently. They catch themselves to years ago, they couldn't tell the difference between a good trade that lost and a bad trade that won. Now, they understand that distinction clearly. None of these changes feel dramatic in the moment. None of them guarantee profitability immediately. But collectively, they represent enormous progress. They represent the development of discipline, self-awareness, and emotional regulation. They represent someone who is very close to being consistently profitable. But if this trader is focused only on their account balance, if they're measuring success only by whether they're winning or losing money right now, they'll miss all of this progress. They'll only see that. They're still struggling, and they'll conclude that 2 years was enough time and it's okay to stop. This is the tragedy. They're weeks or months away from everything clicking, from the discipline they've been building becoming reliable, from the skills they've been developing becoming automatic, from their edge starting to express itself consistently. But they can't see it, and so they walk away right before they harvest, having done all the planting and watering and waiting, but not staying long enough to see what grows. So, what drives this? What makes a trader give up at precisely the wrong moment? I think it comes down to 3 interconnected factors. The first is the absence of clear external validation. In most learning environments, you get feedback that tells you when you're improving. In school, your grades go up. In sports, you win more games. In a job, you get promoted or receive recognition. But in trading, especially in the learning phase, the feedback is noisy and inconsistent. You can improve significantly without your results improving immediately. You can do everything right and still lose. And this lack of clear validation makes it very hard to trust that you're on the right path. The second factor is the weight of accumulated disappointment. Every time you think you've figured something out and then it doesn't work, you deposit a small weight of disappointment into your psychological reserves. And over time, those deposits accumulate. They create a background state of heaviness that affects how you interpret everything. When you're carrying that weight, even positive developments get filtered through a lens of skepticism. You can't fully believe good news because you've been let down too many times. And this skepticism, while it feels protective, actually prevents you from seeing when things are genuinely shifting in your favor. The third factor is the distortion that happens when you're too close to your own experience. When you're inside the struggle every single day, you lose perspective on the broader trajectory. You can see the daily ups and downs, the wins and losses, the moments of clarity and confusion. But you can't see the overall trend. You can't see that the quality of your decisions is improving, that the frequency of your mistakes is declining, that the speed of your recovery from setbacks is increasing. You're too zoomed in to see the pattern, and from that zoomed-in position, everything just feels like more of the same. These 3 factors create a perfect storm for quitting right before success. You have no clear external validation telling you to keep going. You have accumulated disappointment, making you skeptical of any positive signs. And you have a distorted perspective that prevents you from seeing your own progress. In that state, giving up doesn't feel like giving up. It feels like accepting reality. It feels like making a mature, rational decision to stop investing in something that isn't working. But here's what you need to understand. That feeling of rationality, that sense that you're being realistic and sensible by quitting, that's often the feeling that emerges right before a breakthrough. It's not because the universe is cruel or testing you. It's because breakthroughs in complex skills happen after extended periods of struggle. And during those struggles, your mind generates narratives to explain the difficulty. And the narrative it most often generates is that you're not capable. You've hit your limit. It's time to move. And that narrative feels true. It feels like an accurate assessment of reality. But it's actually a story your exhausted mind is telling you to escape discomfort. The question then becomes, how do you know the difference? How do you know if you're genuinely not suited for trading and should stop, versus being in this zone where you're close to success but can't see it? This is one of the hardest questions any trader faces. And I'm not going to pretend there's a simple answer, but there are some things you can look at that help clarify the situation. First, are you making the same mistakes you made a year ago, or have your mistakes evolved? If you're making the exact same errors repeatedly with no change, that's one kind of signal. But if your mistakes have changed, if you've overcome some issues and now you're working on different, more subtle challenges, that's evidence of progress, even if it doesn't feel like it. Second, can you execute your trading rules more consistently than you could 6 months ago? Even if you're not executing perfectly, even if you still break rules sometimes, is there improvement in your consistency? If yes, you're developing discipline, which is the foundation of everything else. Third, has your understanding of trading deepened? Can you see things in the market or in your own behavior that you couldn't see before? Growth in understanding is real progress, even if it hasn't translated to profitability yet. The translation happens, but it takes time. Fourth, and this is crucial, are you still learning? Are you still having moments where something clicks, where you understand something new, where you see a connection you didn't see before? If yes, your learning curve is still active. You're still developing. And that means you're not stuck. You're just in the messy middle where growth is happening but hasn't stabilized yet. If you can answer yes to most of these questions, then you're probably closer to success than you think. And the feeling of wanting to quit, while real and understandable, is more about exhaustion than a boot. It's about your mind seeking relief from prolonged discomfort, not about you having reached the limits of your capability. But there's another possibility we need to address honestly. What if you've been doing this for years, and none of these markers of progress are present? What if you're making the same mistakes? You're not more consistent, your understanding hasn't deepened, and you're not learning anything new. What then? Then you need to change your approach. Not necessarily quit entirely. Maybe your strategy isn't suitable for you. Maybe your risk management needs adjustment. Maybe you need education or mentorship you haven't gotten yet. Maybe you're trading in conditions that don't match your method. But the absence of progress over a very long period is information. It's telling you something needs to change. The question is whether you change your approach or change your career. And that's a personal decision only you can make. What I see most often, though, isn't traders who've genuinely hit a wall after years of no progress. What one sees is traders who are making progress, often significant progress, but they're so worn down by the journey that they can't see it. They're so focused on what's still wrong that they've become blind to what's changed. And they're on the verge of quitting not because they can't do this, but because they don't realize how much they've already grown. There's something else that happens to traders who are close to success, and it's worth naming directly. They start to feel like they're the only ones struggling this much. They look around, they see other traders posting wins, talking about their strategies, sharing their successes, and they feel isolated in their difficulty. They think everyone else figured this out faster, easier, better, and this comparison amplifies their sense that something is wrong with them, specifically that they're uniquely incapable. But this perception is distorted. What you're seeing from other traders is curated. You're seeing their highlight reel, not their struggle. You're seeing their wins, not their losses. You're seeing the version of themselves they want to present, not the reality of their daily experience. And when you compare your internal experience, all the doubt and fear and confusion you feel, to their external presentation, you're comparing two completely different things. Of course, you come out looking worse in that comparison, but it's not a real comparison. It's an illusion created by selective visibility. Every trader who has made it to consistent profitability went through a phase that felt impossible. A phase where they questioned themselves constantly, where they thought about quitting, where they couldn't see how they would ever figure this out. Some of them talk about it now, but most don't. Because once you're on the other side, it's easy to forget how hard it was to get there. Or you remember it, but you don't share it because you want to be seen as competent and successful, not as someone who struggled. So, when you feel like you're the only one finding this impossibly difficult, understand that you're not. You're in the normal, expected, completely universal experience of learning something genuinely hard. And the fact that it's hard doesn't mean you're failing. It means you're attempting something worth doing. Now, let's talk about what happens after someone quits, because this is where the full tragedy reveals. itself. Most traders who quit don't quit cleanly. They don't make a clear decision and move on with peace. They quit reluctantly. They quit while still wondering, and that wondering stays with them. Sometimes for years. They'll see something in the markets and think about how they would have traded it. They'll hear about someone making progress in trading and feel a pang of regret. They'll find themselves looking at charts. Occasionally, not trading, but remembering. And in those moments, they ask themselves the question they couldn't answer when they quit. What if I had stayed just a little longer? What if I was closer than I thought? This haunting happens because deep down, they know they didn't quit from a place of clarity. They quit from a place of exhaustion, and exhaustion passes. Months later, years later, when they're no longer carrying that weight, they can look back and see things they couldn't see in the moment. They can see that they were actually making progress. They can see that they gave up right before things might have clicked. And that realization is painful in a way that's hard to describe. I'm telling you this not to manipulate you into staying. I'm telling you this so you understand what's at stake in these moments when you're thinking about quitting. The decision you make now will echo in your mind for a long time, and you want that echo to be something you can live with. You want to know, when you look back, that you made the decision from a place of clarity, not from a place of exhaustion and distorted perception. So, what's the alternative? If you're in that place right now where you're thinking about giving up, what should you do instead? The answer isn't just to push through mindlessly. The answer is to pause. To step back. To create some space between your current state and any major decision. Give yourself a week where you don't trade, don't think about trading, don't consume trading content. Just rest. Let your mind recover some clarity. And then, from that more rested place, assess honestly. Look at the evidence of your progress, not just your feelings about your progress. Look at what's actually changed in your trading over the past year. Look at the mistakes you're not making anymore. Look at the things you understand now that you didn't understand before. Look at the moments where you did execute well, even if they're mixed in with moments where you didn't. Try to see yourself from the outside the way a coach might see you, rather than from the inside where everything feels heavy and unclear. If, after that honest assessment, you see genuine progress, even small progress, then you're probably closer than you think. And the feeling of wanting to quit is more about needing rest and perspective than about having reached the end of your potential. In that case, the right move isn't to quit. It's to adjust. Maybe reduce your trading frequency. Maybe lower your position size to reduce emotional intensity. Maybe take a longer break to reset psychologically. Maybe find a community or mentor who can help you. See what you can't see yourself? But don't quit from exhaustion, because that's not really a decision. That's a collapse. On the other hand, if your honest assessment reveals no progress over a very long period, if you've genuinely tried different approaches and nothing is working, if you're not learning anymore and you've lost interest in learning, then maybe trading isn't your path. And that's okay. Not everyone is suited for this. It doesn't mean you failed. It means you tried something genuinely difficult and discovered it's not aligned with who you are or how you want to spend your time and energy. That's valuable information, and there's no shame in acting on it. It means you tried something genuinely difficult and discovered it's not aligned with who you are or how you want to spend your time and energy. That's valuable information, and there's no shame in acting on it. The key is making the decision consciously, not unconsciously, making it from clarity, not from collapse, because a decision made from clarity is something you can live with. You can look back on it and know you did the right thing. But a decision made from exhaustion, from distorted perception, from accumulated disappointment, that's not really a decision. That's a reaction, and reactions, especially major life reactions, often lead to regret. There's one more thing I want to address, and it's about the nature of success itself. Because I think part of why traders give up when they're close is that they have a specific picture in their head of what success will look and feel like. And when they don't experience that picture, they think they're not succeeding. But the picture is usually wrong. Traders imagine that success will feel like validation, like finally proving to themselves and others that they can do this. They imagine it will feel like relief, like the struggle is finally over. They imagine it will feel like confidence, like certainty, like arriving at a place where trading is easy and stress-free. And when they don't feel those things, when trading still feels challenging and uncertain and emotionally demanding, they think something is wrong. This is why traders give up when they're closest to success. Because success doesn't announce itself. It doesn't arrive with it emerges slowly from the accumulation of small improvements. And if you're not paying attention to those improvements, if you're only focused on the gap between where you are and where you want to be, you'll miss the fact that the gap is closing. You'll only see that there's still a gap, and eventually that becomes unbearable, and you quit, not knowing that you are almost there. But now you know. Now you know what that feeling actually is? It's not necessarily truth. It's exhaustion, mixed with distorted perception. And if you can recognize it, if you can name it, if you can create space between the feeling and the decision, you give yourself a chance to see more clearly, a chance to discover that you're further along than you realized, a chance to stay long enough to find out what you're actually capable of. And that chance, that possibility of discovering you were almost there, that's worth pausing for. That's worth resting and reflecting and reassessing before you decide. Because the only thing worse than quitting would be quitting now, when you're closer than you've ever been, and spending the rest of your life wondering what would have happened if you'd just stayed a little longer. Thanks for staying with me through this conversation. If something here spoke to you, let me know in the comments. And if you found value in this, consider subscribing for more on trading psychology. You in the next one.